Judges, are we ready to go? One. Before we begin, do we have any paradigms that you guys want to be aware of? Awesome. All right, pleasantries on or off time. If it's right with you, I'll do them all then, if that's okay.
Sure.
I'm starting now then. Thank you guys so much for being here. Thank you, audience, for giving us someone to talk to. Thank you, judges, for hopefully giving us some good feedback and judging this round. Thank you, opposition, for being here to give us someone to clash with. It's a very interesting topic. The resolution, judges, this House believes corporate stock buybacks are not good for prosperity. We are government, so we do believe this statement. We are defining this as a value case, and with the net benefit framework, and then we're defining these terms as such. Corporate stock buybacks. Any company buys back their stock from the marketplace with their accumulated cash. We're defining the phrase not good as not helping towards the cause of prosperity in this specific instance, just not good, not helping towards that cause. And prosperity as able to be financially secure despite any calamity. And I'll kind of break that down as we move through here. I hope you'll understand where that's going. We are also defining the House as Americans who make under $250,000 a year. And again, I think we'll make that apparent as we move through this discussion. So, judges, what I'm going to be doing is I'm going to give you my 3 points, some sub-points with those, some evidence to support these claims, reiterate kind of my definitions, make sure we're all on the same level playing field here, and then I'm going to give it over to the opposition. So again, our first point is that with this happening, it manipulates stock prices, which is not good for the average consumer. Our second point is the little guy, in this instance, the House, makes less, the top 1% make much more. And our third point is this benefits corporate investors and short-term investors over, again, the everyday American who makes under $250,000 a year. So, kind of moving through here, we have a lot of stats to go through. I'll be sure to be thorough and make sure we all know where they're coming from. Again, stock options can be priced and manipulated at a higher rate when they are bought back. This is a fact. Again, I found a quote here. The market sees all and adjusts to all. That's from Joseph Zitka. So while we're moving through here, we have to understand, depending on where you read it from, CNBC, Bloomberg, CBP.org, Fox News, CNN, where I'll be kind of pulling these things from. Doesn't matter what political side you're leaning on, they're all saying these same things, and we'll corroborate them with some evidence. Our second point, the little guy makes less, and the top 1% make more. The top 1% in 2021 made $45.9 trillion. That's from CNBC 2021. 15.9 trillion of that, so almost a third of that, was just from corporate stock buybacks. So a third of that 45.9 trillion just alone from that. And again, that's not going to the everyday man, that's going to the millionaires and the billionaires who have access to those funds to be able to buy those things back. Another quote from Bloomberg 2022, tax cuts and buybacks are tilted towards the wealthy. And again, when we're talking about wealth in this, and again, I know wealth is a little bit subjective, that's why we're making a value case. But again, I want to remind you, we're saying the House is anyone who makes below $250,000. So if you're in the billionaire status, we are saying you're extremely wealthy in this scenario. Third, CBPP.org. Lower and middle income families pay for the corporate taxes they pay with these buybacks. In fact, it's hurting the little guys are even making less money because they're not able to access these funds, they're not able to do these buybacks, they're not able to access the trillionaire and billionaire, and then they're getting hit with these taxes the corporations are having to take, and it's affecting the lower guy, it's affecting the little guy, and again, anybody under $250,000 a year. Our third point, this benefits corporate investors and short-term investors. Fox News 2022, CNN 2022. The majority of these people who are buying these buybacks in the 2022 era, the 2021, before and after pandemic, depending what you look at, majority of them, and when they say majority, over 80%, are people who are above millionaire status. And again, when we compare that to the fact that we're saying it's affecting people who make under $250,000 a year, that really paints a sharp picture that this is not good for prosperity when we're comparing it to our House. So again, judges, while we're looking at some other things, I have some more stats for you, kind of reminding you where we are. While it manipulates stock price, the little guy makes less, and it benefits corporate investors, we have to remember, Investopedia 2022, another source that says short-term investors who are doing these corporate buybacks are the ones who benefit, not the small guy, not the little guy. Again, you can burn your options. Depending on what you know about economics, we already know that the way this whole system is slated, it is not designed for the people who make that $250,000 a year. Again, there's a Bloomberg 2021. People who make under $250,000 a year, 80% of them are living paycheck to paycheck. They're not able to invest in stock options because they're having to pay for their house. They're having to put their kids through school. So when you look at this, who's benefiting from these buybacks at the end of the day? Our research says it's millionaires and billionaires, not people who are living paycheck to paycheck, making under $250,000 a year. When we look at what our research is telling us, they're making an absurd, ungodly, I don't even know how I'd spend $15 trillion personally in amount of money on a comparative spectrum compared to the 250,000 people are making a year. Thirdly, this whole system is just simply benefiting those who are buying these buybacks with the money that they already have and not benefiting and giving prosperity for the ones who are making under $250,000 a year. So judges, as we're moving through this, remember, we have defined the house as anybody makes $250,000. You're going to hear that number a lot, and I hope that it sticks with you. We believe this is a fair representation because, in fact, we think we almost went lower because the majority of Americans are not making $250,000 a year. That's also from Bloomberg, a lot of financial stats here today. So when you look at this, even those who can't make $250,000 are suffering less. And that's the majority of Americans. So then if you're above that $250,000, if you're in the millions, in the billions, you're having those investing opportunities that the others can't have, and it's not good for prosperity for those Americans. So with that, with the stats we're going to be giving you throughout this, we hope you vote in favor of the government.
All right, first I would like to extend a blanket of thanks to everyone involved to make this day happen. First of all, thank you judges for being here on a Saturday. We understand that this is a continuation of yesterday's events and we appreciate your time here. As well as I'd like to thank the government for providing such an interesting case today and my partner for helping me build this stat. So first of all, I want to address the government's definitions. We accept this round as a value round. We accept that the goal of this is the net benefits of the system, and prosperity is defined as financial security, particularly in the economic sections. They define the house as Americans under $250,000 a year. We will agree with that definition and we'll move forward. First of all, they say that the corporate buybacks manipulate stock prices. We do not disagree with this. This is a simple fact of economics. When corporations go and buy back their shares available in the free market, what they're doing is taking away the availability and increasing competition for those stocks. Now, it's very important to note that this does not occur on a completely anonymous, unbiased basis. Corporations are required to announce a corporate buyback in the open market, as is declaration, according to the same Investopedia source that they referenced before. Corporations are required to announce any buybacks, meaning that any outside sources, including the little man of $250,000 a year, are made aware of these corporate buybacks and are thus able to encourage and increase the amount of stocks purchased following or prior to the buybacks. So this is not just, as they said before, the market sees all, meaning not just the top 1% sees all, but everyone sees all. They're able to see this curve upwards before it happens, and they're able to act accordingly. Now, their second point, this corporate buyback hurts the everyman and benefits only the CEOs and the primary shareholders. It is technically true that in the short term, corporate buybacks increase the company profit. However, it's very important to know why that happens. The corporate investment is an investment in themselves. When corporations experience a corporate buyback, what they're essentially saying is that they're willing to invest in their own company, establish their own priority on stocks, and really take back control from the open market. And what that establishes is that the company is so confident in their ability to succeed that they will reduce the amount of shares available and say, we don't want more investors. We're confident in our abilities. What we need is time and money, and we're going to use that to invest. So what they do is they invest in their corporations and expand that in far more meaningful values. What does that mean for us? Corporate buybacks have a direct correlation with investments in the company. This indication of investing in their future is not just in the corporate buyback scenario of buying the company's shares, but more importantly, they're investing in the future of their company, which includes the workers and the everyman at the bottom of the totem pole. We can continue this argument that big companies are evil and will always invest towards the wealthy. That's fine. But the existence of big corporations and their absolute influence over the economy cannot be ignored. If we allow these corporations to get larger or to increase their influence and understanding and invest in themselves, what we're allowing them to do is in the long run increase the availability and the total benefits for everyone involved, not just the 1% or the shareholders. As we've established before, these buybacks have to be announced prior to. No corporate leisurely stroll through the stock market can simply take back every single corporate share on the open market and do it unannounced. The government would have you believe that these corporations are doing this in a secretive, conniving way. This is not the case. Corporations understand that buybacks are able to influence their stock prices and drastically increase the company's profits for that time. But they don't say where that money goes to. Because while it is true that some of that will go back to the primary shareholders and their dividends will increase, the overall attitude of these buybacks is investing in the company's future. And in the long term, a better, stronger company is able to more thoroughly impact the American everyman. At the end of the day, when we come down to it, the simple fact is this. The stock market is its best and strongest when stocks are moving. If we were going to say that corporate buybacks are not good for prosperity, we would say that these moving stocks are bad. They would prefer stagnation and waiting for any available opportunity rather than the investment and the movement in the stock market. We've seen time and time again that movement is the most important aspect of a well-functioning economy. This is one avenue that we simply cannot ignore. The government defines prosperity as financial security. What more security can you have than a stable economy, stronger companies, and a self-investment mindset? There are aspects of investments in corporate buybacks that do benefit the upper class. The statistics show an increase in money flowing in that direction, certainly. But what they can't tell you is the inevitable increase in workers' wages, community organizations, and any other founding thing. If the company is terrified of their future, they can't afford to invest in their own workers, in their own communities, in their own environments. And what this does is allow them the security and the promise to their community that they will be able to one day. And it starts with corporate buybacks. It starts with this self-investment mindset, and it continues throughout. Because these increase the share price. It's perceived as a net gain for the economy, and as such, these moving stocks are far better than any stagnation the government would offer. We don't urge that corporate buybacks should be abolished, and neither does the government. We simply argue that they are better because the self-investment mindset, the growth of these companies, and the stabilization of our stock market is always going to be better than any alternative. For these reasons, we ask that you vote in the opposition.
I'm sorry. Judges, are you ready? Opposition? Partner?
Sure.
If I can get the right time. Hey, I'd like to give a blanket of thanks to our judges today, our opposition, and all the audience members for being here today, so we're not screaming into the void. I would like to go over a few just general points before we dive down deep further. The fact that the opposition has agreed to our framework type and all of our definitions flows through. I also like to point out the fact that they did not clash on our third main point, which is the shortchanging both long and short-term investors. So again, that goes flowing through into our points. Now to talk about our first main point again, which is the manipulation of stock prices. We have talked about this. The opposition didn't really clash much with it. They said that the corporations must announce buybacks, so that makes it okay. Again, our house is under the American people who make under $250,000. We're not talking about these big corporations. We're talking about prosperity for these houses that make under $250,000 a year. Our second main point was that the people who make under $250,000 a year don't make the money in this situation, that is the corporations. Again, the clash on this was corporations must announce their buybacks, and the investors themselves are taking back the power in the organizations. Again, I'd like to point out the fact that within the amount of money that the top 1% had made last year was $45.9 trillion, and out of that money, $15.9 trillion was from corporate buybacks. The House, which again is people who make under $250,000 a year, are having to pay this back with their taxes when they're getting these tax buyouts, such as in the Trump administration. During the Trump administration, there was a tax cut for these big corporations from 35% to 21%, and this is AmericanProgress.org in 2019. And with this, again, the American people are the ones that are suffering with this, and this is what our value was, the prosperity of the House. While I still have some time, I'd just like to go over a few more of the stats and facts that we're talking about prior to this. Our third main point, even though the points flowed through, I want to make sure you guys fully understand what we are talking about that today. We're talking about both short-term and long-term investors. A short-term investor tends to be corporations themselves, initially, those are the ones that are making the benefits, but long-term use of corporate buybacks actually will decline the equity from the stockholders, resulting in financial challenges. And this is from 2022 sfmagazine.com. And why this happens is the continuation of the burning of options. So they just continue this cycle of buying them back and selling them, and buying them back and selling them. Again, the opposition wanted to make that point that the corporations having these buybacks is to take that power back. But I believe this stat here saying that they are burning their options and this is a continuous thing that's happening shows that they're not really taking it back. They're just trying to make the most money while they can. I'd like to go through our voters again. The fact that the opposition had agreed to all of our definitions, that's a points that flow through to us. The fact that they did not clash on our third main point, again, points that go to us. I'd like to go with that fact that we've clashed their clash on our first main point, which was that corporations must announce their buybacks. Again, just because they announce their buybacks doesn't mean this is prosperity for the lower class. Our second main point being, again, that the House, the people who make under $250,000 a year, aren't the ones making the money in this, they're actually the ones losing the money in this. I believe with all the facts that we brought up, with the 1% and how much they've made from stock buybacks over the last year, proves that this is, in fact, true, and again, is not going towards our value of prosperity. With all of these points we brought up today, I believe you should vote in favor of the government. Judges ready? Ready?
Yes.
Partner, ready?
All right, so I'd like to begin with thanking the judges for being here today, and not just as the normal thanks, but you really are taking time out of your day, and we really appreciate that. Thank you to the government for providing such an interesting case today, and my partner, of course, for helping me build this case. Let me jump right in to a few important things that need to be mentioned. The first is that prosperity was not defined as money made, but financial security. So this is not about who is making the money, it's about whether or not they are secure. So the benefits are a sustained value of the economy, and that the economy itself is able to be stable and thriving with these stocks moving. That is extremely important. Now, let me go back over a few points here that my partner made. So first is that the government made the point that this manipulates stock prices and that the market sees all and adjusts to all. The fact that the market sees all and adjusts to all is true, and it actually increases the competition for the stocks when it's bought back. And as the company is required to announce buybacks, people are able to say, oh, I'm going to buy up more of these. And then the companies, many times, if you don't want to sell back, they will offer more than the market price for this. So more money can actually be made from that. So the second point that the government made was that the little guy makes less and the top 1% makes more from this. Again, this was not defined as who makes more money, but financial security. So therefore, that point doesn't really apply entirely. But again, in the short term, the company will profit, and investors will profit themselves as well if they hold out for that higher market value offer, or they buy up more to be able to sell back. They'll be able to profit from that as well as the fact that, again, the economy is going to be healthier, it's going to be vibrant, and that's going to be a more stable economy in and of itself, which is better for that little man under $250,000. Again, we're looking for stability here. We're not looking for profits. The stability of the economy means more stability for those little people. The stock market is at its best and it's strongest when stocks are moving. So again, that point that the people don't make the money doesn't really matter, because at least they're in a stable economy. And that's what matters in the long run in the argument that the government is making, is that they are in a stable and happy position here. These people, it can be bought back for more than the market value. They will actually make more off of it then than if they were to just sell it. That is better in the long run for the little people. So again, this is more appealing to investors in the long term, as they're able to make money when this comes about, when they buy back from it. The earnings per share is going to go up. It's going to boost share prices in this buyback. That is better in the long run, again, for the company, for the investors, and it's going to mean a more healthy economy. Again, when share prices are going up, that means confidence in the company is going up. If they're willing to invest in themselves, then these people are saying, we believe that our company is worthy of us buying into. We're in a good place. It's going to make investors look and say, this company clearly is in a good place, that they're going to buy into themselves. We're going to want to invest in them as well, because clearly they're in a good place. This is a good place to make profits. That is an extremely important point to understand. So for those reasons, judges, I would strongly urge you to vote for the opposition. Thank you.
Okay. I would like to start this round off by clarifying a lot of the definitions the government provided in the first half that we did in fact agree with. First of all, they defined the house as Americans under $250,000 a year. They defined the judging criteria of this round as the net benefits of corporate buybacks in regards to prosperity, which they defined as financial stability within economics. Now, it's important to note, they did not define prosperity for the house, the people making under $250,000, as more money and more liquid money in their pockets. They asked for financial stability, and corporate buybacks offer that at every step of the term. First, Their first point was that the manipulation of stock prices within corporate buybacks is only going to hurt the everyman. This is not true. When corporate buybacks do not take place, these stocks stagnate on the open market, don't move at all, and stay completely still. And yes, there are some minor trading within, and we can't obviously ignore that. But the point of the fact is, when you allow corporate buybacks, and when they do occur, as they do occur in a cyclical cycle, it moves the economy forward in a more stable way. Remember, judges, we are not arguing for financial prosperity in the regards of money in our pockets and boats in our marinas, but rather financial stability for the American everyman. That's what corporate buybacks offer, and that's what they have offered for the past 50 years. Their second point, this hurts the everyman as they are losing money. Again, that is not what they defined as prosperity. Prosperity is the financial stability, and we have consistently seen the self-investing format that these companies have is proving time and time again they're willing to invest in their own corporations as a sign of good faith. They understand that their corporation will be stronger because of it, and they can benefit everyone in the long run, not just the 1%, but the workers, the unions, and the communities around them. Their third point is that this only benefits short-term investments and corporate shareholders. This is true. Corporate investments help these short-term investors. But as we stated previously, they have to declare their buybacks, which means that these short-term investors don't just have to be the sharks waiting at the tip of the iceberg for these stock market shares, right? They're not smelling the blood in the water and attacking the first available share. They announce it to everyone. And that allows anyone to join. Like they said in the beginning, the stock market sees all. At this investment, at this convergence, the everyman is just as advantaged as the 1%. Because they have the exact same notice to say, we're going to allow our corporate buybacks to occur at this date and time. Get them before they're gone. Establish a principal investment before we do it ourselves. But the primary goal is movement. Because a moving, fluid, vivacious economy is one that stays in business. And at the end of the day, the self-investment mindset and the stable economy is far more financially secure for the everyman than a small chunk of change in the beginning of the first quarter. Stable companies are far more indicative of a stable economy and a stable country than temporary liquid investments that would vanish. Look at the investments we made. Look at how these corporations invest in themselves, continue this self-fulfilling prophecy, and encourage everyone to join that movement. To encourage that liquid growth, not just in financial gain, but in financial stability. Big businesses are the main proprietors of corporate buybacks. And there's a reason for that. They're the most important and the most able to influence this change. They're able to encourage everyone around them to invest not only in the company themselves, but in the understanding that the future of our company is better when it is moving, fluid, and dynamic. So at the end of the day, the voters are simple. The government would have you believe that corporate buybacks only benefit the top 1% and don't even acknowledge the fact that a stable company, a stable job without closures or closings, or laying off every single corporation that has it. These corporate buybacks allow them to invest in their future, providing a stable life for the everyman. It's important to note we are not judging these criteria off of whether or not the American everyman makes more money or is less disadvantaged towards the 1%ers. We've already established that the wealth tips up. But the point of that is stability. If every corporation has the ability to enforce their own financial security with corporate buybacks, surely you can't argue against them. Because we're not arguing for liquid monetary value. We're arguing for the security of our nation and the security of the everyman. And that is most present with buybacks. For these reasons, we issue to vote in the opposition.
Judges, are we ready? You guys don't have to write anything down, but are you ready? Okay. Awesome. Again, blanket of pleasantries. I appreciate the fantastic and cordial class you guys have provided. Probably the best debate we've had, and I've been in 4 already, so this was nice. Judges, I usually only have one judge. Sorry, judges, you all matter, I promise. Judges. I do want to go over a definition. It is important, and I believe that this will crux the entire debate, and this will be what the decision maker is. So that's why I'm going to spend time doing this. Talk about the criticisms they've made, give you our voters, and leave the room and probably find a donut to eat. So, prosperity definition, written down on my piece of paper. I'm not lying. It's written in black, and then blue is all the alterations I made while we've been talking. Able to be financially secure, not stable. I don't want to be nitpicky, but that does determine this entire debate. Stability and security are 2 different things. And in fact, judges, I'd also like to make you aware of the fact that when I say financially secure, we're talking about money. Financials is money. So while the criticism is valid if you look at it through that lens, we have clearly stated, beginning to end, financial security. Talking about financial security in the definition of people who make under $250,000 a year. If we look at that, not a single clash against any stat we've listed saying that the majority of people who make these investments are millionaires. The fact that people who make under $250,000, the majority of them cannot do anything but live paycheck to paycheck, not able to make these investments. And in fact, opposition said that the majority of Americans living paycheck to paycheck says that's fine as long as the economy is, quote, stable for the millionaires and the corporations. We, as the government, think that's not the case. So, going through our voters and going through some criticism as we do it, voter number 1, manipulating the stock price does not help anybody but the corporations and the millionaires who are able, the majority of them, are able to buy these stocks. Number 2, again, something that was clashed with, but not securely clashed with because they were going under a different definition. The little guy does make less. They did not clash with the fact that they are having to pay these corporate taxes with the millionaires and billionaires making these investments. Secondly, tax cuts and buybacks, quote, are tilted towards the wealthy. That's from Bloomberg, a billionaire corporation and a billionaire himself, Bloomberg himself. The top 1% made $45.9 trillion in 2021. 15 trillion of that was from corporate buybacks. All things that were not clashed at all. Things that were not disputed. Number 3, this does benefit corporate investors and short-term investors, and they agreed with me. They said, yes, this does happen. However, stability for these corporations is good for everybody. But the stats that we've given you simply said that's not true. So, judges, looking at our voters, number 1, they've agreed with us on the definitions that corporations do these things. They have agreed that corporations do these buybacks and it benefits them. I think we need to all recognize that. Number 2, I've clarified my definition, and the definition is important. Financial security, which means money security, which means money that you know you have. And when you have less and you're living paycheck to paycheck, which the majority of Americans are, again, not contested by opposition, we have to look at this and say, hey, it's not helping. It is not good for prosperity for the house. So, again, I would also like to mention that obviously, there was no stat, a counter stat, if you will, that disproved anything that we listed about the wealth garnered by the trillionaires. They did not make a stat that talks about how the under 250 do have the capabilities. We have given you statistical analysis, but we've also given you net benefit. And that's what we're going to be running with. This is a value case after all. And we have shown you that the net benefit for these people is not good. The house does not make money like the millionaires and the trillionaires and the corporations do. So judges, with these facts in mind, with the statistical analysis, but also the values I presented you, I hope that you vote in favor of the government, because I believe we deserve your vote. Thank you. You guys mind handshakes? Well done, guys.
Class, well done, well done.
You had a different partner last time, right? Okay. How's she doing? She okay?